Today we're going to calculate before tax cash flow. And first thing we have to do is calculate net operating income. If we remember that to calculate net operating income, it's a given. And that helps us remember how to calculate net operating income. Gross income minus vacancy and collections equals effective gross income. I break this out because this is one of the greatest distractors on exam questions. Then you back out operating expenses. And from there, there's no depreciation, no debt service, and no capital improvements. So those are not allowable operating expenses. So when we subtract out operating expenses, we get net operating income. From that, we're going to subtract out the debt service, and we will get the before tax cash flow. So let's try solving this problem. Pause the recording and see if you can calculate the before tax cash flow. From here, we're going to start out, first we got to remember given, right, from the previous slide. Gross income minus vacancy and collection is effective gross income minus operating expenses. Again, no debt service, no depreciation, no capital improvements gives us net operating income. Back out debt service, and that gives us our before tax cash flow. All right. So here it's already giving us the property has an effective gross income of $275,000. So we're starting out at the $275,000 effective gross income. So the 5% vacancy and collection losses is a distractor. So start out there. We're going to back out allowable operating expenses. So we can't use, so there's no depreciation, right? Can't include the debt service either. And so what's allowable as expenses? Management fee of $27,500, and we can back out other operating expenses of $98,000. So subtract that out. And when we do that, you get a net operating income of $149,500. From here, we can back out the debt service of $39,000. So back out $39,000. And when we do that, we get a before tax cash flow of $110,500. And so right there, we have our answer, $110,500. Whenever you're given a before tax cash flow problem, the one thing that you need to remember is just the formula. So we're always going to remember given. So gross income minus vacancy and collection equals effective gross income. Effective gross minus operating expenses. No debt service, depreciation, or capital improvements gives us net operating income. Net operating income minus debt service gives us the before tax cash flow. And so now we can work our way backwards. So pause the recording and try to solve this problem. So they've given us before tax cash flow of $2,149,200. To this, we're going to go back and add the debt service. So $65,000. $65,000 here, add those two together, and you have net operating income of $2,214,200. Good. Now we need to add back the operating expenses. So we have other operating expenses of $122,000 here, and we have management fee of $203,000 here. Again, we're not going to include the depreciation of $14,000 because that's not allowed. Add those up and you have an effective gross income of $2,539,200. All right, so gross income equals 100%. Vacancy and collection is 8%. So effective gross income is 92% of that amount. So if we're working from effective gross income, we can divide this by 92% or 0.92 and get the gross income. So gross income will equal $2,760,000. Here it's asking us what would the yearly rent be. And so all we're concerned about is the number of units. Divide this by 200 units and the yearly rent required would be $13,800. Now remember to be very careful and answer the question as to whether it says yearly or monthly, because that will dramatically change your answer. For additional videos, visit the class website. Remember, you can post questions under the discussion tab to collaborate with other students. For additional videos, visit the class website. Remember, you can post questions under the discussion tab to collaborate with other students.